Good afternoon. Welcome back. This is the third session or the penultimate session for the 2 days conference. And the last session will be on penalties and prosecution. In a way, this session is also on penalties because any session after the lunch will be a very penalizing session. Okay. Having said that, let me try to make this session as interactive. I want as many questions to come from the audience here as well as from the audience who are virtually present. I don't know, somebody may be reading out the questions. You can read out the questions or you can show me the questions. I can take the questions also. Having said that, Mr. Manohar Gupta, the senior member, he wanted me to say a couple of things. I was told that in the previous session on deposits, loans from money brought in by the directors is not considered as deposits. But there is one very important condition for that. That should not be out of borrowings. That should not be out of borrowings. But what I was told is, if it is borrowed from a bank, and that money is brought into the company, whether it is deposits. A director of a company takes money from borrows money from the bank and puts it into the company, whether it is good or not good. I mean, what I was told is, if it is taken from the bank, it is told not. I mean, it is exempt. The answer is no. Any borrowings, including the borrowings made from the bank, if the director puts in, because that should be his own money, he should give a declaration that it is out of his own funds and not out of borrowings. And borrowings includes borrowings from the bank. Having said that, there is one very interesting thing, that if the promoters of the company bring in money to the company by virtue of a condition in the sanction letter, the bank has given a sanction saying that I have given you 10 crores, you have to bring in 2.5 crores. And if the promoters bring in 2.5 crores, that even out of borrowings can be brought, because there is no condition there that promoters also have to give a declaration that it is not out of borrowed funds. However, the very important point there to be noted is, if the money, if the primary borrowing from the bank, that 7.5 crores borrowings which is repaid, when it is repaid, then after that, this money also has to be repaid. Otherwise, he has to give a declaration that it is not out of borrowings. So that is a succinct difference there. So let's proceed further. So we will, any questions you have? Okay. Yeah, correct. That is a very interesting question. Suppose I have actually taken a borrowing right now, but I have got enough funds otherwise. I have got FD and I have pledged that FD. I mean, there one can probably take a lenient view. And of course, not given in any scriptures, but I am of the opinion that it is not out of net borrowings in that sense. It's my own money which I have kept it in the bank. There are different views possible. Let me be very clear. There are different views possible. I can only argue in favor of such a case to say that it is not a borrowing. Ultimately, it is not a borrowing. What I'm saying is, I'm keeping 1 crore FD and taking 75 lakhs as it is borrowings in the narrower sense of the term, but in the broader sense of the term, I have not borrowed, rather I have in fact given my money to the bank, although there can be different views possible. Yeah, so that is one thing. Absolutely. It is not the company need not do an investigation whether it is out of borrowings or not. As long as the director gives a declaration, the company should be, it did not do a further due diligence on that particular matter. Perfect. Yeah. Then also a point to be noted is, when it comes to the pledge of FD, the company has company has an FD of 1 crore and it is now taking a overdrawal against such an FD. Should that, the bank will be marking it as lien. The bank will be marking it as lien. The question is, should that particular security be created in the ROC's office? Should a CHG1 be filed in that context? What is your view? In 1956, pledge was exempt from creation of security. Now there is no more exemption available. It could be any type of security. The moment you are giving security, that security has to be notified with the registrar by filing a CHG1. If not, what happens if you don't file? Now the lien is marked by the bank. The lien is marked by the bank. Now between the banker and the borrower, it's a secured deposit. It's a secured loan. But between the creditors, if the pledge is not notified through filing of CHG1, amongst the creditor, even the bank will become an unsecured creditor. Even the bank will stand as a unsecured creditor, although they have marked lien. Tomorrow, for whatever reason, let us say only 80% of the assets are being given to the loanees in that sense. So even that particular loan, which is 100% secured according to the pledge document, that will stand in the queue of unsecured creditors. So to that extent, we have to be very clear that CHG1 has to be filed even in that context. So these are the two things that Mr. Manohar Gupta wanted me to. Yeah. No, you see, the loan is subsisting. If the loan is subsisting, then there is no need to file. It is CHG1 is created, the charge is created at the time of borrowing, not every year. So the answer is at the time of borrowing and get going. No. What I was telling, sir, I mean, you're slightly late. In case there is a pledge of FD by the company has kept 1 crore deposit, and against that deposit, it is taking a loan. And the bank has taken lien, that has marked lien, and tomorrow this FD will not be released unless you repay this loan. Now, having said that, should a charge be created on this particular FD with the sub-registrar office? I mean, with the ROC's office? The answer is, in 1956 Act, pledge was exempt from charge creation. Under 2013, including pledge, there is no specific exemption given. Including pledge, any security created will be reckoned for the creditors at large if and only if a CHG1 is filed to that extent with the ROC. Otherwise, although there is a mark of lien or security from the banker's perspective, tomorrow if the company goes for liquidation or for whatever reason, the bankers also stand in the queue of unsecured loans. Sir? No, sir, tender deposits, are they secured? We are talking of secured loans. So we are not talking of all deposits need to be charged. Charge has to be created only when there is a security given by the company to somebody else. So only in that context. Okay? So these are the two things, and let's go further. Now I was talking about the clause by clause. Now we will go through all the 20 clauses. 20 within brackets 48. Now that is the total number of clauses that we have to deal with. Now, when you deal with the 48 clauses, there are two ways of dealing with it. Suppose there's a question, have you verified the inventories? Has the inventories been properly verified? I could start off saying, in my opinion, and to the best of my knowledge, based on our audit procedure, when all these things, all these wordings, should it be there in the CARO report, yes or no? It should be there. Because if I straight away start answering that, the inventory verification has been done properly, or willful defaulters, there has been no willful default, the company is not in the list of willful defaulters. Whatever answers I give for the question, if I straight away go to answer it, without the coverage of these words, in my opinion, to the best of my knowledge, based on my audit procedures, etc., the other person may think that it is a straight question and answer. I would always try to cover by saying these words. Always better. Now the next question that comes out is, should I prefix these words with every answer, or can I give a general? No. It is not a disclaimer to that extent. I am telling to the world at large the basis of my statement. In my opinion, there could be a difference. Suppose Prakash Chandji answers that question, he may opine it in a different way. But generally, the professional judgment means between two professionals, the judgment should be the same. Having said that, to the best of my knowledge, based on my audit procedure, based on whatever according to the information and explanation gathered by me. I keep on telling this, and then I give my opinion. So there are two ways. The guidance note itself says either by a general preface at the beginning itself, or you give it at for every answer you can go on giving this. क्या prefer करेंगे सर? What would you prefer? It is an individual choice. It is an individual choice. Coming by the lift or coming by the staircase is an individual choice. So you decide which way you want to come. I would prefer to come by the staircase. Okay? Or for whatever good health reasons. But having said that, in this case, I would like to give it as a preface at the beginning itself. That is how we have been doing, but some of them have been giving in every statement, and to some extent it could be differing between the general and particular also. So if you see, now I'll take you to how we give the answers. So this is what I said. So this is annexure. So at the beginning itself, in terms of the information and explanation sought by us and given by the company, I have sought and they have given, and the books and records examined by us in the normal course of audit, and to the best of our knowledge and belief, we report the following. Whereas you can prefix this in the beginning of every answer also. Okay, so this is the way we go ahead. Next, let's proceed further on this. Now, what is the first question and what is the changes? Now, if you see there are two documents here. This is a Word converted into PDF. The other one is a PPT converted into PDF. So I will call it as a Word document and a PPT document for all my purposes. In this Word document, finally, please understand, all of us know Schedule 3 requirement comes out of Excel and Caro comes out of Word. In practice, we don't deal with PPT. I wish we can, but having said that, PPT is only for sessions like this, but it is a Word document. So the actual Caro reporting, I am calling it as Word. So in this particular document, wherever it is shaded in, you call it as blue or green. Okay. If it is shaded in green, that is a new concept introduced in Caro 2020 vis-a-vis Caro 2016. So for example, let me tell you whether the company is maintaining proper record showing full particulars, including quantitative details and situation of fixed assets, was what was told in 2016. Now it is told property, plant and equipment. Now, why did they change from fixed asset to property, plant and equipment? Because Schedule 3 says property, plant. So financial statement jo bolta hai, hum wahi bolna hai. Why does Schedule 3 say property, plant and equipment? Because accounting standard says property, plant and equipment. Now, why does accounting standard say property, plant and equipment? Because international accounting standards say property, plant and equipment. Why does international accounting standards say property, plant and equipment? Sir? You know why? Huh? Now, where do you classify laptops, mobiles in the balance sheet, sir? Under property, plant and equipment. Now, earlier it was fixed asset, right? Now, that was a question. This is a fixed asset, no? Is it fixed, sir? It is moving, especially vehicles. We had a big problem. When you talk to the non-finance people, they'll say, under fixed assets, what comes means vehicles. They'll say, sir, vehicle is not fixed, it is moving. So, confusion barbaradu anteli. They said we will call it as property, immovable property, plant. Machinery, we understand. What is plant? It could be a living plant also. In accounting standard 10, today we deal not only with the plant and machinery. अगर आप tea bushes grow करेंगे, coffee plantation, tea bushes, teak wood, although internationally we deal it with agriculture. There is an Ind AS 141 on agriculture, but in accounting standards, until the standard on agriculture is built up, we are dealing with living plants also under accounting standard 10 only. Having said that, so they have changed the terminology. To that extent, we need to be. Again, I will tell you, in your Caro, if you say, what is this? Whether the company is maintaining proper records and full particulars, including situation of fixed assets, if you say now, that means you have not upgraded. It has to be property, plant and equipment. Of course, to that extent, you will have to do your due diligence as to whether what is meant by full particulars, what is meant by quantitative details. Now, whether company is maintaining that means in short, whether the fixed asset registers are properly maintained by the company, showing full particulars, including quantitative details and situation of property, plant and equipment. What could be the answer for this? I mean, I've just worked out the various possible answers. Of course, we all know the company has maintained, or the company is not maintaining proper records showing full particulars, including quantitative details and situation of property, plant and equipment. Now, this is what, if the company is maintaining proper fixed asset register, when a word of caution, when you are saying something positively, don't give proper. I'll just tell you an example. The company has maintained proper records. The company has maintained reasonable records. Now, if it is maintaining 100% perfectly, give proper records, no problem. But then there will be some 1% idhar udhar. So it will be in your own interest. Tomorrow somebody goes and challenges that is not there, this percentage is not told, something like that. So I would say that it would come to your rescue if you use such words. The company has maintained reasonable records showing full particulars, including quantitative details and situation of property, plant and equipment. I'm just trying to give a hint there. When the company is not maintaining, you can say the company is not maintaining proper records. There you cannot say the company is not maintaining reasonable records. I mean, that's the type of answers that is, I mean, as an auditor, experienced auditor, yeah, sir? वो experience से मालूम होता है क्या बोलना है बोल के. So that is what I am trying to say. Next. Question number B. Whether these property, plant and equipment have been physically verified by the management at reasonable intervals, whether any material discrepancies were noticed on such verification, and if so, whether the same have been properly dealt with in the books of accounts. Now, these property, plant and equipment we know have been physically verified by the management. Please understand, auditors need not verify plant and machinery. It is primarily the responsibility of the management. Of course, the auditor may have to do a test check at reasonable intervals. What do you mean by reasonable intervals? What is reasonable interval? Sir? So what is, when it comes to inventories, there is a difference between inventory verification and property, plant and equipment. Proper inventories have to be verified every year, every month, every quarter, if not every month, every year end. Okay. But when it comes to property, plant and equipment, what is expected through the guidance note also, that reasonable intervals means at least if the property, plant and equipment are spread over so many places, they've used this. If it's spread over so many places and they are very large in numbers, at least once in every 3 years. Once in every 3 years. Because immovable property kahan baake jata hai? I mean, it will not in that sense. So you can do a classification and say if there is too much of movements in a particular PPE, that may be every year you have to do it. So use that logic and say reasonable intervals can be up to within a period of 3 years. If it is done like that, you better say that here in your answer. There is a proper system, at least once in every 3 years or once in every 2 years, all the fixed assets are being physically verified. Whether any material discrepancies were noticed on such verification. If there are any material discrepancies noticed, what should happen? Go to AS 28, impairment. So provide for impairment. So what is the difference between depreciation and impairment? Depreciation is a systematic write-off in the value of the asset. Impairment is to capture unsystematic write-offs. Something got missed out, something got stolen. So whatever external reasons, internal reasons, you'll have to provide for impairment. If so, whether they have been properly dealt with in the books of accounts. Next, the third bit, whether the title deeds of all the immovable properties disclosed in the financial statements are held in the name of the company. Now within bracket there is something other than properties where the company is the lessee and the lease agreements are duly executed in favor of the lessee. Now, what does this mean? Sorry? Operating lease, in the case of Ind AS 116, you have to record the right to use asset. The right to use asset. Now, whenever you are taking a building on a long-term basis or any asset on a long-term basis, in the case of financial asset, you become the owner, although you are not the legal owner. You are a lessee, but you become the legal owner by virtue of the documentary evidence. Risk and reward has already got transferred to you. But by virtue of Ind AS 116, even in the case of an operating lease, if you have a lease period of more than 1 year subject to certain other conditions, you will have to record that asset as your asset, as right to use asset. So this particular bracket applies only to Ind AS cases, because the normal accounting standards, we don't recognize operating lease as our asset. So in that context, you will have to answer that separately. But for all other cases, accounting standard cases, whether the title deeds of, this was always there. It has been there since 2016, whether the title deeds of immovable properties are there in the are there in the name of the company. If not, provide details thereof in the format below. So in 2020, what has got changed is the CARO itself has given the format. Earlier, the format was given by the guidance note. Apna guidance note had given the format. Now the format is given by the CARO notification itself. That's the only change. Yeah. There could be situations where the properties are brought in the name of the directors. Money has gone from the company. But registered in the name of the directors. So they want to plug this. This is there in 2016 also, from 2016. So continue. So what are the, in the table, what are the things that they've asked? Description of the property, maybe land and building situated at Devanahalli. Gross carrying value. What is the gross carrying value? Book value. Gross carrying value has been defined in accounting standard 10 as historical cost plus revaluation, if any, minus depreciation, accumulated depreciation minus accumulated impairments. So that is gross carrying value held in the name of Mr. X, whether promoter, director, or their relative or employee. So we'll have to say this. Period held the last 6 years or from the last 6 years or since 2016. Indicate range where appropriate. Reason for not being held in the name of the company. Also indicate if in dispute. So these are the things that has to be factual. No big common sense there, but of course, we'll have to give it in if it is in the name of the, or it could also be a situation where an LLP has got converted into a company. It is in the LLP's name, or the firm has got converted into a company. So there also in the remarks column, we'll say that it is in the name of the erstwhile LLP, but it is, anyway, it is said that the conversion rule itself says that it is automatically deemed to be in the name of the company. But to that extent, it is not in the company's name. Through deeming provision, it comes out. Next, point number D. Point number D is an altogether new point. Whether the company has revalued its PPE, including the right of use assets or intangible assets or both. First question is whether the company has revalued its PPE, including intangible assets. The answer could be yes or no. They have not revalued, or you can say the company is carrying its property, plant and equipment at historical cost. Hence, clause 1D is not applicable. You can straight away say that. And if so, whether the revaluation is based on the valuation by a registered valuer. That is the answer that you have to give. If it is done, whether it is done through a registered valuer. Specify the amount of change. If change is 10% or more in the aggregate of the net carrying value of each class of PPE or intangible. So if it is more than 10%, we'll have to give the detail. So how do we give the answer? This is the table which we are giving. One is to say the company has not revalued its PPE and intangible assets during there, and therefore 3.1D. Please understand, where is this paragraph 3 coming from? Paragraph 3 is the CARO notification. paragraph 3 of Caro notification gives us all these 20 points. So we'll say para 3, 1 means the first point in that D of the order is not applicable. Or the company has not revalued its PPE during the year and therefore the order is further the company does not have any right to use assets. The company has revalued the property, plant and intangible assets during the year on valuation report by the registered valuer or other than a registered valuer. The change in the net carrying value of each class of property, plant and due to revalue is below 10%. Now, if it is above 10%, this is what our institute's guidance note expects us to give. The company has revalued its PPE and intangible assets during the year based on valuation report by a registered valuer or other than registered valuer. The change in the net carrying value of each class of property, plant and equipment due to revaluation is above 10% and the details are as under. Class of property, plant and equipment, original net carrying value, revalued net carrying value and the change. Point to be noted with respect to revaluation. If at all you have done a revaluation, nothing to do with Caro, I'm talking about the accounting treatment of if at all you have revalued any of your property, plant and equipment. Let us say you are having a building of 1 crore. Now somebody says it is actually worth 10 crores. So you have revalued your building from 1 crore to 10 crore. So where will the 9 crores effect go in your balance sheet? It goes under the revaluation reserve. It goes under the revaluation reserve. Now the question is depreciation on 10 crores. Depreciation on 10 crores. Where will you debit depreciation of 10 crores? Depreciation of 10 crores. When we were reading accounting standard 10, it was permitted that up to 1 crore jo value hai depreciation ka, that you debit to P&L account. The incremental 9 crores, depreciation on 9 crores, you can debit it to revaluation reserve. You may debit it to revaluation reserve. So we used to do that such that our EPS, our net profit ratio, etc. improved. But with the accounting standard 10 coming into picture from 2016 onwards, the entire depreciation on 10 crores must be debited to P&L account. Must be debited to P&L account. So that is and it is not only with respect to those assets which have been revalued after 2016, including the ones which have been revalued earlier. So what they have told, one very interesting thing is, you can move to the extent of the depreciation because revaluation reserve for all practical purposes is not considered as free reserves or whatever. What they told is to the extent of whatever incremental, you can shift from revaluation reserve to general reserve, other reserves. But the debit to on account of depreciation should be to P&L account. So this is a very important change I thought we should know. Yeah. It is at the class of asset level. It's a class of asset. And one very important thing is if you are revaluing an asset, the entire class has to be revalued. You cannot say I'm only revaluing buildings situated in this zone. All the buildings wherever they are has to be revalued. So that is the picture. Each class of asset has to be revalued. Then point number E on 1E, what is the question? Whether any proceedings have been initiated or are pending against the company for holding any Benami property under the Benami Transaction Prohibition Act and rules made thereunder. If so, whether the company has appropriately disclosed the details in its financial statements. So what is this question? Please understand the question. Whether, they have not asked us to say, are there any Benami assets in the company? Benami assets means owned by somebody, funded by, only nominal owner is somebody. It's actually funded by somebody or used by somebody, funded by somebody. So if that is the situation, disclose. That is not the question. Please understand. I don't have to investigate as an auditor whether there are any Benami assets. The question is whether any proceedings have been initiated or are pending against the company. Who is initiating the Benami Proceedings Act? Under the Benami Proceedings Act, who is the initiating officer? Income Tax Department. That means are there any pending proceedings from the Income Tax Department on account of this Benami Act against the company? if there is any, then only you should record it here. There could be a situation where there has been only a show cause notice issued. Show cause notice issued. No initiation has happened. Our guidance note says, although you are not under an obligation, because the question is initiation has not happened. I mean, what is initiation is again a question. So therefore they said, if there is a show cause notice, you bring out that fact here. You bring out that particular fact here. If there is nothing, then you might as well take up management representation letter to this extent and proceed. Yeah. Mic could you, mic could you.
Yeah. So there are various cases where companies may be charged for acting as a conduit. So they are actually not end beneficiaries, but they're acting as a conduit for a Benami transaction, and they're implicated or charged in particular case. So in that particular case, would reporting be required here?
Yeah, because if so, whether the company is appropriately disclosed. Actually, what you're saying is, I have it in my financial statements? It could be in my financial statements, but it does not belong to me. And there has been an initiation. I will have to report.
I mean, just to give a practical example, let's say there's a GST transaction involving fraudulent GST billing, where you're acting as a pass-through. So the beneficiary, you're not the end beneficiary, but the company is just acting as a pass-through.
But is it being questioned under the Benami Transaction Act?
I'm giving an example.
No, I'm saying, Benami transaction is a specific act. Your GST Act is not being talked about here.
No, the point I'm trying to make that is sometimes under the ambit of GST, Benami is also brought in the picture because if because it's proceeds of crime which are involved. I'm just giving a hypothetical example. So here the
proceeds of crime, I think, comes under PMLA. I mean that Prohibition of Money Laundering Act.
Yeah.
And things like that. Not under the Benami Transaction Act.
Yeah.
Benami Transaction Act is very clear. It is my money in your name. I mean my property in your name.
Yeah. So in that case, I'm just saying that practically in many cases, even though the company is not either the owner or the assets are not being owned by the company is implicated by virtue of just being a party to that particular transaction in some form or the other. Right? So in that case,
then see, there could be a situation where knowingly or unknowingly, I am doing it in your name. I mean, that's what you're trying to say. I am doing it in your name without your knowledge. If I am your auditor, let me put it like that. The auditor of your company should bring out that fact. You can dispute saying that it is without my knowledge. You are, of course, a party to the transaction. You may plead ignorance saying that without my knowledge it has happened. I mean, that is a dispute that you can give out. Yeah, that's it about point number 1. Then we go to point number 2. So we finished property, plant and equipment. We are going to inventories. So what is the question on inventory? Whether physical verification of inventory has been conducted at reasonable intervals by the management. So this question was always there in 2016 and before that also. Subsequently, and whether in the opinion of the auditor, the coverage and procedure of such verification by the management is appropriate. Now they are hitting the nail. Earlier they said physical has been conducted at reasonable intervals means yes or no answer. They have been conducted. Now the question is now getting loaded now. Whether in the opinion of the auditor, the coverage and procedure of such verification by the management is appropriate. So I'll have to get into the qualitative aspects of earlier I only the quantitative aspects, maybe how many times, whether they have happened once in 3 months, etc. Whether in the opinion of the auditor, the coverage and procedure of such verification by the management is appropriate. So you'll have to get into the how are they doing the inventory verification, what is the instruction that is given to the people who are carrying out the inventory, things like that. Whether any discrepancies of 10% or more in the aggregate for each class of inventory were noticed, and if so, whether they have been properly dealt with in the books of accounts. So what do you mean by class of inventory? It has not been defined here. Class of inventory has been told in Schedule 3. Raw material is a class. Work in progress is a class. Finished goods is a class. Stock in trade is a class. Then stores and spares and loose tools. So that these are happening. So within raw material, are there more than 10% variation? Within work in progress, are there more than 10% variation? If so, has it been properly dealt with in the books of accounts? Now, this is where I was saying, suppose you come to a conclusion that it is not properly dealt with in the books of accounts and you say here, to that extent, your main audit report also should be qualified. because to that extent your inventory is overvalued or not properly valued. So implication of this on that. Next, whether during any point of time of the year the company has been sanctioned working cap. No, this is a very beautiful. Wherever there are more than 5 crores borrowing, the banks will ask for, wherever there are overdrafts and cash credit limits, they will ask for monthly stock statements to fix up the drawing power. However, if the loan sanction is more than 5 crores, apart from monthly statements, they also ask for quarterly information system or financial follow-up review statements. Different banks call it by different names. At the end of every quarter, that is Q1, Q2, Q3, Q4, and there are half year ends. That means Q2 and Q4, they are considered to be half year ends. You are supposed to give more statements. At the end of every quarter, you give sales summary, what is your P&L account summary. At the end of half years, Q3 and Q2 and Q4, you have to give your balance sheets also, unaudited of course. So it will contain debtors, creditors, stocks, sales, profits, so many information. Now the question that is asked here is whether during any point of time of the year, the company has been sanctioned working capital limits in excess of 5 crore rupees in aggregate from banks or financial institution on the basis of security of current assets. So that is the first bit of the question. Now always this arrow has got 2 bits. I mean, you will see this. This is the first bit. If the answer is no here, then the second bit does not apply. Have you been sanctioned more than 5 crores at any time during the year based on the strength of current assets? That means if you have a term loan for property, for buying an immobile property, the answer is this particular clause will not be applicable. So we are concerned only with current assets. Whether the quarterly returns, because bank will say in all these cases, Reserve Bank of India has told for better monitoring, credit monitoring, they said that you will have to collect quarterly information apart from the monthly stock statement, which could include monthly stock statement will have only stocks, receivables, creditors information, whereas quarterly it will have sales, profit, aging analysis of creditors, aging analysis of debtors, getting into the granular details. So now the answer, if somebody has taken more than 5 crores, the answer next bit is whether the quarterly returns or statements filed by the company with such banks or financial institutions are in agreement with the books of accounts of the company. If not, give details. Very, very, very loaded question. That means all these days I was looking into the agreement with the books for the year end. Where I have a proper balance sheet and books of accounts, I will do. Now I will have an improper return and improper books of accounts. Quarter end May, 30th June, 30th September, 31st December and 31st March. Okay, no problem. So for all these 3, 4th anyway merges with the year end. So no problem. But the first 3 returns, whatever they are given, I will have to, if I'm maintaining it in tally, take out a printout as on 30th of June and compare whatever information has been given on 30th June quarterly stock statement. Whatever they have given, let us say stocks, and have they fed in stocks here. Maybe stocks they can feed in because ऊपर नीचे बीच में हो गया तो उनको कुछ फर्क नहीं पड़ने वाला है. But debtors and creditors, they would have given it in the stock, in the quarterly information, whether that is matching here. Now creditors, aging analysis, debtors, they would, because they're more concerned with debtors aging analysis. Especially those of you who are dealing with the banks, you will know there is something called a cover period. When they fix 90 days cover period, any debtors more than 90 days will not be considered for the purpose of drawing power. So the company will say whatever is more than 90 days also as less than 90 days. Now here, if you see the balance sheet on 30th June, it would have been invoiced. It is a debtor here, debtor here. Debtor of 10 crores, if it is shown as 10 crores, no, first issue, no problem. But debtor of 10 crores here, I am showing all this 10 crores is less than 90. But out of 10 crores, 2 crores were invoiced before before March. Therefore, they have breached the 90 days period. So that is also a discrepancy between the books and this could apply even for the quarter 4, because quarter 4, The aging analysis, the inventory, all those things will apply there also. So a very, a tough situation for the auditor because he has to point out a tougher situation for the company which is being audited. So therefore, forewarn them. We have been, of course, telling them that whatever you give, please give it as on 30th June. Take a printout from your books, and that only you feed it in your return and give it. The question that comes out is, what if my drawing power does not come to that extent? That is a problem that they have to face. As auditors, we have to give what is right. Factual. Yes, sir. Yes, Dograj. Okay. Yes.
Disclosure income would be mandatory to be
Yes.
compared.
Yeah, Dograji, very good question. It is an overdraft facility. I can draw as much as I want, repay, but it is not against current asset. It is against an immovable property. So in that context, the question itself is, because in aggregate from the banks on the basis of the security of current assets, your basis of security is not current asset, but immovable property. So the answer is, for the first bit of the question, it's this does not apply. Having said that, sir, you also ask the bank. The bank will not ask for your quarterly information in that context. Yeah. Why do they need? What are they doing with that? Maybe see that if they're asking, no. If they're asked for monitoring purpose, if they're asking, you can give that. But this question does not apply because this is on the strength of current asset, very clearly told. Yeah. Because that is what we call it as LAP, actually, loan against property. So for loan against property, the strength is the property and not the operations of the business. That they should not ask, but if they're asking, anyway, this question does not apply. Yeah.
It has been breached
No.
the entire year.
What happens is, now you again check up whether you have given the quarterly information. Let us say you have taken it in the month of September only. In the month of September only. Normally, the banks will ask details only from September. So you would not have given quarterly otherwise. But probably you would have given a monthly stock statement. The monthly stock statement of April and May is not relevant, but that of June actually becomes a quarter. So to that extent, the answer is not very clear, but the question starts with any time during the year. So it looks like, although you have not given the QIS or FFR, you would have given a monthly stock statement as of June. Although your more than 5 crores happened subsequently, you may have to comment on that. This is my personal view. Okay. Yeah. Now we go to bit number 3, question number 3. Question number 3, sir. Prakash Chandji. Question number 3 जो है, कितना क्वेश्चन है मालूम? A में A में A B, okay, then B C D E F, okay. But look at the beauty of this. What is the question, sir? Whether during the year the company has made investments in, provided any guarantee or security, or granted any loans or advances in the nature of loans, secured or unsecured, to companies, firms, LLPs, or any other party. They could have just said to anybody. Okay. Whether during the year the company has made investments. So you look at the balance sheet, you look at the asset side. Asset side mein, has the company made investment in or provided any guarantee? I mean, here they have told that it is financial guarantee, not the performance guarantee. Performance guarantee is not to be reckoned. Or security. I have given a guarantee means, a financial guarantee means should come as a contingent liability. Or security. I have given any security or granted any loans or advances in the nature of loans, or advances in the nature of loans. I could have camouflaged something as an advance, but actually it is a loan. You know the difference between advance and loan. What is the difference? What is the difference between an advance and a loan? Yeah. Beautiful. In both the cases, money is going out from me. In the case of loan, money is coming back. In the case of advances, goods or services are coming back. It will be squared off with something else, not money. So that is what he's saying. Advances, I have given advances, calling it as advances, but they are actually in the nature of loans. So that type, secured or unsecured to companies, firms, LLPs, or any other parties. If so, give the details. Now I will give you a situation. The details are many. Whether during the year the company has provided loans, advances in the nature of loans, or stood guarantee or provide security to any entity not applicable to companies with principal. If so, give details. The aggregate amount during the year and the balance outstanding at the balance sheet date. These are all factuals. I mean, I don't have to explain to the chartered accountants as to what is to be given here. It does not involve rocket science, but you'll have to be very faithful in your replies. Okay. Now, the aggregate amount during the year and the balance outstanding at the balance sheet date with respect to such loans or advances and guarantees as security to subsidiaries, joint ventures. The aggregate amount during the year and the balance outstanding at the balance sheet date. So you can read this. I'm not going to read it for you. What I was trying to say is, if the company has got investments or loans, you'll have to answer to this, right? I will give you a situation. In 2021, I had given 2 crores as loans, which is subsisting in 2022 as 2 crores loans. Should I answer A, B, C, D, E, F? Yes or no? But that investment continues in 2022 also. Should I answer this question A, B, C, D, E? Because if I have not given any loans or investments during the year, I don't have to answer. My question to you is whether it should be construed as given during the year or no. I have not given during the year literally. Huh. No, if you look into the guidance note, they have not told in this manner, but they have underlined the word during the year in a very bold and underlined way. समझने वाले समझ लो. What I mean is, I can say that during the year, the company has not made investments in or provided any guarantees or securities. If I can say that, then in that because only if it is so, then I have to give A, B, C, D, E. So they have very beautifully in the guidance note, please go and read the guidance note. They have given that particular thing with an emphasis and told emphasis provided. So that means because they don't want to say that, but they have said that. So you can say that. So if during the year, that's what I said, the example of 2 crores last year, 21. During the year, I have not given anything. The 2 crores subsists. For me, the answer is during the year, the company has not made any investments in. So therefore, this clause is not applicable. Bol sakte, sir? Yeah. Yes. So other questions, I would not read it in detail, but all of them are new. All of them are new. Then the aggregate amount. Now, whether the investment made, guarantees provided, security given, and the terms and conditions of the grant of all loans and advances in the nature of loans and guarantees provided are not prejudicial to the company's interest. Anyway, under 143.1, you are supposed to take care of this. It has now been told, 143.1 means the 6 points. If they are present, I mean, if they're all okay, you don't have to report. If anything one of them is not okay, you have to report. Any personal expenses debited to profit and loss account, such things, advances in the nature of loans and things like that, not properly secured, prejudicial to the interest of the company, etc. So this has to be commented going by the situation. Next, point number C, in respect of loans and advances in the nature of loans, whether the schedule of repayment and the payment of interest has been stipulated and whether the repayments or receipts are regular. So other questions I am not going to read because this is a plain question and answer. You will have to deal with that individually, nothing. Point number E, whether any loan or advance in the nature of loan granted which has fallen due during the year has been renewed or extended or fresh loans granted to settle. Evergreening. Simple case of evergreening. So you'll have to comment on that. Whether the company has granted any loans or advance in the nature of loans either repayable on demand or without specifying any terms. So earlier we used to say the company has not specified any repayment terms and therefore question of repaying. So he is now specifically asked if there are any such loans. If so, specify the aggregate amount, percentage thereof to the total loans granted. I have got 10 crores, out of which 7 crores is loans I have given without specifying when it has to be repaid. I have to now say 70% of my loans are like that, 7 crores out of 10 crores. Specify the aggregate amount, 7 crores. Percentage thereof to the total loans granted. Total loans granted is 10 crores. 70% of the loans that I have granted are without any repayment terms. Aggregate amount of loans granted to promoters, related parties as defined in 2 subsection 76 of the Companies Act. So I'll have to give that particular detail. Any questions on this? This is a very, very loaded question. If you have got, please look into your balance sheet. Loans, advances, and investments has to be scanned through, and the information about this has to be provided accordingly, especially if there is any incremental over last year. If it continues from the last year, the answer is no. In fact, the institute has given us a format in which it has to be given. The guidance note: guarantees, securities, loans, advances in the nature of loans. Aggregate amount granted, bar provided during the year to subsidiaries, joint venture, associates, others. Balance outstanding at the balance sheet date in respect of the above cases. And then this is one format which they have given. And the other format is in respect of loans or advances, the nature of loans, we report that the schedule of repayment of principal and payment of interest has been stipulated, but the repayment by receipts are not regular. Details are which are provided below. Name of the entity, amount, due date, extent of delay, remarks if any. The total amount that is overdue for more than 90 days, there is a table provided. We report the following instances of loans in the nature of granted which has fallen due during the year, has been renewed or extended, evergreening. And the details of loans or advance in the nature of loans either repayable on demand and or without specifying any terms of the parties, all parties, promoters, related parties. So we have to give it in this particular format. Yeah. Next. Yes. Very, very simple. What is a loan? What is an advance? If it is very clear that goods or services are coming to you, then they are advances in the nature of advance. Otherwise, it is a loan. You are camouflaging a loan as an advance. That is what it is. Eventually, it will come back to you as money. It will come back in the form of money. Then it is an advance in the nature of loan. There is no guidance. I mean, maybe if you have given any advance, you must ask for what is a contract. What are you going to get back in return? I'm getting back some immovable property, some inventory, some services. There must be some contract based on which the advance is given. This is exactly where even under deposits, we have a situation like this, where advances are given towards immovable property and the other person does not have an ownership at all. Okay, there it is told that it will be deemed to be deposit. That's what I was telling. Deemed to be deposit means the other person does not have the right to sell, but you have given him and you have considered it as a good deposit. I mean, what an exempted deposit. But if he does not have the right to sell, the ability to sell, whatever, then it becomes a deemed deposit, although it is classified as advance for immovable property. Okay. Point number 4, in respect of loans, investments, guarantees, and securities, whether provision of section 185 and 186 of the Companies Act have been complied with. If not, provide details thereof. 185, 186, I think Tirupal has already dealt with in detail, right? Discussion on loans and advances. So what is 185? 185, loans to directors. Loans to directors, 185 is very harsh. In 2017, they reduced the rigors of this particular section, where they said directors, non-corporates and directors in companies in which directors are interested. Companies in which directors are interested, loans can still be given subject to compliance with certain conditions. But loans to directors and the firms in which the directors are interested or their relatives are interested are still barred. Very few exceptions are provided. You must have gone through that. I'm not getting into the details of 185 because we already had a session on 185. What is 186? 186 says if you are going beyond a particular limit of giving the loans, 60% and 100%, then you will have to take a permission from the general body. It goes beyond the directors, and therefore you have to take a permission from the from the members. That is 186. And if such loans are given, then you must compulsorily charge interest. Yeah, you must compulsorily charge interest. They have specified what is the interest. And 186 subsection 2 goes to the extent of saying you shall not have more than 2 layers of investment company. So this is 186. 185 loans to directors. So what is the question? This has always been there, continues to be there in 2020 also. In respect of loans, investments, guarantees and security, whether provision of section 185 and 186 of the Companies Act 2013 has been complied with. If not, provide for the details thereof. Any questions here, sir? Now here, how the format has been given by the institute, the company has not given any loans or investments guarantees to the provision of 185 of the Act apply. However, regarding loans, investments, guarantees to which the provision of 186 apply, following are the non-compliances in case there are any. Investments through more than 2 layers, still possible. Investment through more than 2 layers possible. There are exceptions. One has to go through section 287, 2 subsection 87. Loan given or guarantees given or security provided. Loans given at the rate of interest lower than that prescribed. Any other default. Yeah. Fifth question. What is the fifth question? Fifth question has always been there, but there has been a very small change. In respect of deposits accepted by the company, this was there earlier. Now they said, or amounts which are deemed to be deposits. Amounts which are deemed to be deposits, whether the directives issued by the Reserve Bank of India and the provisions of section 73 to 76 or any other relevant provisions of the Companies Act and the rules framed thereunder, where applicable, have been complied with. If not, the nature of such contravention be stated. If an order has been passed by the Company Law Board or NCLT or RBI or any court or any other tribunal, whether the same has been complied with or not. So what do you mean? So all these days, in respect of deposit accepted by the company, now they have introduced are amounts which are deemed to be deposits. What are deemed deposits? Let me just take you through. I told you what is the meaning of deposit. Deposit includes any receipt of money unless they fall into any one of the 18 criteria. Now, what are the 18 criteria? If it is taken from a government, if it is taken from a foreign person subject to FEMA compliance. Okay. Then third one is loans or facility from banks. Loans or facility from public financial institutions, commercial papers. If you have taken loan from another company, what we call popularly as intercorporate loan. Money loan taken from one company to another company by another company from another company is called intercorporate deposit from their side. For me, it is intercorporate loan, exempt. Security application money, share application money within 60 days. Directors, amount taken from directors subject to declaration, and relatives of directors. Now, whether relatives of directors also should give a declaration, they also have to give. They also have to give. When I collect the loans from the deposits from the members, if I am taking any money, it is called as deposits only. Whether they have to give a declaration that it is out of borrowed funds, not out of borrowed funds. Where is it told? You have the rules. So directors have to give a declaration. Relatives of a director is applicable only for private limited companies should give a declaration. And you have the rules with you, sir. You have the rules with you. The members also have to give a declaration, which is given in very small print. When they give the application should contain that it is when the members are giving the deposit, they should say that it is not out of borrowed funds. So that rule applies even to members. Please read. You have that? It is given in the rules in a very small print. No. But then you have to see the rules. Members, when they give the application, they have to give, along with the application, they have to give a declaration that it is not out of borrowed funds. It will be there. Okay, then issue of secured debentures, convertible debentures, unsecured listed debentures, any amount collected from the employee is not considered to be deposit as long as it is within 1 year salary, up to 1 year salary, non-interest bearing and held in trust. This is something very interesting. We don't know what it means, but it is a omnibus provision where if it doesn't fit anywhere, you can fit it here and take it as a exempt deposit. Unsecured loan from promoters, I told you, if and only if stipulated by the banks, any amount accepted by a Nidhi company. Now this is where it is. Any amount received in the course of or for the purpose of the business of the company as advance from customers. Advance from customers up to 365 days. Beyond 365 days, it becomes a deposit. No problem. Again, renew. You are renewing the advance. It is green, but is evergreen. Sort of. I mean, you have returned it and you have taken an offer. So it's a new contract. Okay. Then advance for immobile property, security deposit under contract. Now, if I have taken any security deposit under a contract, that means you have given me a security deposit. Like, for example, it could be for buildings. And I have given you a building and you have given me a security. That money, it's a money, but exempt deposit because it is under a contract. Advance for long-term projects. This is again very interesting. Advance for long-term projects. I have taken goods. I have taken money for supply of goods on a long-term basis. Maybe I'm a shipbuilder or a dam builder or whatever, building dams and aeroplanes and things like that. Advance for future services. Advance received and allowed by sectoral regulator. Advance of subscription towards publication. Now, the Outlook magazine, they take 5 years in advance, or it could be also for the advance for future services could be like Benz company taking 5 years service contract in advance. Point to be noted here is A, B, D. What is that? Advance from customers. B, advance for immovable property. And D, advance for long-term projects, whatever has been underlined, becomes refundable. If it becomes refundable, due to the reason that the company accepting money does not have necessary permission or approval to deal in goods or properties or services for which money is taken, then the amount received shall be deemed to be deposits. That is what is the meaning of deemed deposit. Chit fund and collective investments, alternative investments. So I'm not getting into the details because it has already been dealt with in the some other session. So I just wanted to give you the meaning of deemed deposits. Advance for goods, advance for capital goods, and what is the other one? Long-term project. So these three things, if you do not have the company does not have the right to sell it or take it for whatever reason, then it becomes deemed deposit. Yeah. Whether maintenance of cost records has been specified by the central government under section 148 of the Companies Act, and whether such accounts and records have been so made and maintained. So I would not like to get into the details who should maintain cost records, because whoever has been done for 2016 continues. But please look into that. There are 6 regulated, 33 non-regulated sectors where cost records have been told that you should maintain. Like if you are manufacturing sugar, cycles, cement, they have given a list. So that those are the things we have to look into. But in case such a thing is there, you know, what is the answer that we give? We have broadly reviewed the books of accounts maintained by the companies, because I as a chartered accountant need not look into their cost records in detail. I have broadly reviewed the books of accounts maintained by the company pursuant to the rules made by the central government for the maintenance of cost records, and are of the opinion that prima facie the prescribed book accounts and records have been or has not been made and maintained. The subsequent thing is very interesting. We have, however, not made a detailed examination of the cost records with a view to determine whether they are accurate or complete. The words in the earlier guidance note is now not there in guidance note 2020. Maybe anyway we have told that broadly reviewed, and then again we have not got it. So utna bar bolne ka zarurat nahi. That's what the institute must have felt and dropped that particular wordings. Now, I think point number 7 is a very plain, simple question. Whether the company is regular in depositing undisputed statutory dues, including GST. I mean, this was not there, including GST. GST was not, because 2016 GST was not there. So naturally they brought in GST, Provident Fund employee. So I'm not going to the details of this. So whatever has been done in 2016 must be continued. Whether statutory dues referred to in subclause A have not been deposited on account of any dispute. So earlier ones without dispute, you should have paid more than 6 months. You should have given here. In the next question is whether because of a dispute you have not deposited, then you will have to give that. And please understand that whenever it is in dispute and you have not given, there must be a contingent liability to that extent if there is a demand from the respective departments. Yeah. Question number 8. Whether any transactions not recorded in the books of accounts, have been surrendered or disclosed as income during the year in the tax assessment under the Income Tax Act. If so, whether the previously unrecorded income has been properly recorded in the books of account during the year. Now, where do you surrender, sir? Has surrendered or disclosed? When do you surrender or disclose? First of all, surrender or disclose means it is voluntary. Voluntary means at the time of search or survey. And if you have normally done a surrender, I mean, income tax return when you are filing, it is not called as surrendering, although it is surrendering only in a different way. You understand what I'm saying? We don't, if we had a choice, we would not have paid. But the point I'm saying is we have to pay, we pay. Having said that, the word surrender or disclosed here means at the time of search or survey. Now, if you have surrendered something on your own, and if they have levied something, then I don't call it a surrender or survey, disclose. What is told is during search or survey, you have voluntarily admitted. And whatever to that extent, please look into the statements made on oath, and has it been properly dealt with in the books of accounts. So that is what has to be told. If so, whether previously unrecorded income has been properly recorded in the books of account during the year. Now, this has been linked to whether the company's internal financial controls, whether the company has a proper internal audit system, and whether the company, whether there has been a fraud on the company or by the company. When the guidance note look up that particular thing, they have gone to the extent of saying, please be watchful. If they have surrendered something to the income tax department, that their books of accounts maintained are not faithful representing the, so connect these two things and give your opinion accordingly. Gone to the extent of connecting the things, rightfully so. Now, whether the company has defaulted in repayment of loans or other borrowings or in payment of interest thereon to any lender. If yes, the period and the amount of default to be reported as per the format below. Earlier it said to banks and financial institutions. Now the question is to asking to any lender, has there been a default, and the format is provided below. Then whether the company is declared willful defaulter, please look at this. This is a new question. Whether the company is a declared willful defaulter by any bank or financial institution or other lender. Now, if I have taken a loan of 25 lakhs from somebody, now I have taken it from Prakash Chandji, 25 lakhs. My company has taken 25 lakhs. I have not repaid. Can Mr. Prakash Chandji say that you are a willful defaulter? Because earlier it said only banks or financial institutions. Now it is going to the extent of saying or other lenders. You are a lender. So can you declare me as a willful default? Let me tell you something about willful defaulters. Even in the banks, we have a committee of directors to declare somebody as willful defaulters. I cannot declare every person who has not paid me the loan, I cannot call him as willful defaulter. There is a parameter. Guidance note also says Reserve Bank of India has told when I can classify a person as a willful defaulter. and he should have diverted. So many reasons. Not taken the money, has the ability to pay, but not the willingness to pay. No, so they have told so many reasons. After doing all that, I have to give him a show cause notice why I should not consider you as a willful defaulter. He can reply, etc., etc. Then I can declare him as a willful defaulter. Now here, banks, financial institution, or other lender. Now Prakash Janji says, I also have a mechanism and all these things fits into this. So therefore, I will declare X company to whom I have given the loan as a willful defaulter. Can that happen? The answer is given in the guidance note saying that only a bank, financial institution, and here other lender means should be considered as government or government agency. Any individual person being a non-government or a non-bank or a non-FI cannot declare other person as willful defaulter. So that is the answer that is given. Whether the company is a declared willful defaulter. Now, how will the auditor come to know whether he is declared willful defaulter? One thing is there must be a default in repayment of loans. There have been loans into the company, there has been a default. Once there is a default, I get a doubt whether the other person has classified him as a willful defaulter. Now I will see whether the other person is a bank, financial institution, or a government or government agency. If it is anybody else, I am not bothered about this. If any one of them four, maybe I will get into the interrogation, talk to the banks and find out whether they have been declared, or there are websites where I can get the list of willful defaulters and whether he is one of them. Next, whether term loans were applied for the purpose for which the loans were obtained. If not, the amount of the loans so diverted and the purpose for which the loan is used may be reported. I have taken term loan, diverted, it is fine. If not, the amount of the loan so diverted, the purpose for which it was. How will I know what purpose? First of all, it has gone out. Wife's jewelry, or he has bought some lands in the name of his grandfather. Far-fetched, but then question is there. Whether funds raised on short-term basis have been utilized for long-term purposes. If yes, the nature and the amount to be indicated. Sir, 2003 में सभी था ये question. Whether funds raised on short-term basis have been utilized for long-term purposes. Now I have taken cash credit and used it for buying a machinery or a land. Apparently, yes. Now what they have told is, suppose creditor's money has been used for buying machinery. One question that comes is, I have not raised the funds. In the case of a creditor, it is the goods and services which has come to me, but not the funds itself. Can I give this answer? Although our guidance note is very, vary in giving this particular answer, they said that if the funds have been taken for a specific purpose, it should be used for that particular purpose. And if the funds have been diverted, it is talking about funds, not the goods for whom I have to pay. It has not told. Succinctly, somewhere they have built in. However, if the current ratio is below 1, then you can say that the short-term funds have been used for long-term purposes. There they have told one very interesting thing. The term loan repayable within 1 year, we classify it as current liability. For this purpose, you don't have to consider term loan repayable within 1 year as a current liability. Some Kaji Nyaya they have done. I don't know whether that is a good answer or a bad answer, because term loan repayable within 1 year is also a current liability. But the guidance note has gone to the extent of giving a guidance that that need not be considered as a current liability. So I'm leaving the confusion to you. Now, whether the company has taken any funds from any entity or person on account of or to meet the obligation of its subsidiary, associates or joint venture, if so, details thereof with nature of such transaction and the amounts in each case. I have taken loan to in turn give it to my subsidiary, associates or joint venture. So I'm only acting as a mediator. I mean, not a conduit. In a way, a conduit. I have taken it from somebody and giving it to somebody, but telling it openly, so there's no problem. So I am taking it from, so whether the company has taken any funds from any entity or person on account of or to meet the obligation of the subsidiary, associates and joint ventures, if so, details thereof with nature of such transaction and the amount in each case. This is going to say, I mean, finally they have said that if I have got enough net worth, although I have immediately taken, like what we were talking about, I have immediately taken to give them, but it is my own money because I have otherwise got, I have to get it from somebody, I did not get it, so I took it from him and gave it to him, is a sort of a no answer in this situation. Whether the company has raised loans during the year on the pledge of security held in its subsidiaries, joint venture or associate companies. If so, give details thereof and also report if the company has defaulted in repayment of such loans or such loans raised. A plain vanilla question. You can answer that accordingly. Yeah. Kitna hua? Another 10 minutes. The point I'm saying, sir, is we have still now covered only 9 points. We have covered only 9 points. There are another 11 points. So 10 minutes we'll try to cover. Point number 10, whether monies raised by IPO or FPO during the year were applied for the purpose for which they are raised. If not, the details together with the delays of default and subsequent rectification, if any, as may be applicable, be reported. So I think the first person, Mr. Vivek, they must have spoken about this. I'm not going to talk about it. Whenever there is an IPO or an FPO, this gets triggered. Not in many companies, so we'll not get into the details. Whether the company has made any preferential allotment or private placement of shares or convertible debentures during the year, and if so, whether the requirement of section 42 and 62 have been complied with and the funds raised have been used for the purpose for which the funds were raised. If not, provide details in respect to the amount involved and the nature of non-compliance. So I need to know whether there was a 42 or a 62 issue. Please understand, normally for private limited companies, the best way to raise funds is through rights issue. If you are raising through rights issue, this particular paragraph will not come into picture. If you are raising through private placement or through preferential allotment, then you will have to follow a lot of points. What are the points? Separate bank account. What else? Filing PAS3, then getting a valuation done. So many conditions have to be complied with. You'll have to give the specific names. They cannot renounce in favor of somebody else. The maximum number of 200. So all those conditions have to be complied with. So you'll have to get into that. And if any one of them is breached, the auditor has to bring out that particular fact. Point number 10. Point number 11. Whether any fraud by the company or any fraud on the company has been noticed or reported during the year. If yes, the nature and the amount involved is to be indicated. So, I mean, a very loaded question. Any fraud by the company. What do you mean by fraud by the company? Company means who? Company means management. Any fraud on the company means what? Somebody else has committed a fraud on the company. Fraud by the company means earlier we used to say by the officers and employees of the company. That is removed. So now they said fraud by the company or any fraud on the company has been noticed. Then if yes, the nature and the amount involved is to be indicated. Now, whenever there is a fraud noticed, again, you have an added responsibility of filing an ADT4 with the central government if it is more than 1 crore, less than 1 crore with the audit committee. That is what is point number B. Whether any report under section 143(12) has been filed by the auditors in form ADT3, ADT4 as prescribed under Rule 13 of the Companies Act with the central government. So here filed, they have talked about only filed in ADT4 by the auditors. In fact, apart from the auditors, even the cost auditors and secretarial auditors can also file a report. So if they have filed and you have not filed, that also has to be checked and reported. Whether the auditors have considered whistleblower complaints, if any, received during the year by the company. Certain class companies have to have a vigil mechanism. Vigil mechanism is different from whistle mechanism. When this is whistleblower complaints giving under whistleblower committees we have. So where we have, what is this whistleblower policy? Under the vigil mechanism, we say that if anybody is blowing a whistle, and gives a secret complaint saying that in our banks it can happen that this particular manager is asking a bribe for sanctioning a loan, then he can write to the audit committee or he can write to the directors, and the audit committee should protect such a person. should protect such a person. This is what is a whistleblower mechanism we have. So that is whether the auditor has considered whistleblower complaints, if any, received during the year. All the whistleblower complaints will be discussed threadbare in the audit committee, and therefore the auditor will have to look wherever the auditor will not receive he may also receive, but what he is supposed to look into is whether there has been any whistleblower complaints received by the company and report accordingly. Perfect. It's only, I think, since you asked this question quickly, I'll go to that. Class companies who should have whistleblower. Yeah. So also private limited companies. Yeah. Listed companies where there are loans, borrowings from banks or public financial institutions more than 50 crores. So it could also be to private limited companies. Or company which accepts deposits from the public. So that is not possible in a private limited company. So in the case of a private limited company, if there is any loans or borrowings from banks or financial more than 50 crores, you have to have a vigil mechanism. So that's the point that we are talking about. Nidhi company, I may be not the best in Nidhi company. Maybe Manor Gupta sir should come someday. Whether all the transactions with the related parties are in compliance with section 177 audit committee requirement and 188 of the Companies Act where applicable, and the details have been disclosed. Please look into this. There are two bits in this question. Whether all transactions with the related parties are in compliance with 177 and 188 of the Act. That is one bit. And the details have been disclosed in the financial statement, etc., as required by the applicable accounting standards. That means the disclosure as per AS 18 and the compliance as per 177 and 188. So what is this 188 in a snapshot? So I think yesterday it must have been dealt with by KS Ravi. So first of all, if the transactions are between the company and the related party, who are related parties, 2 subsection 76 defined, then if there are any transactions, are they done at arm's length and in the ordinary course of business? If it is done at arm's length and in the ordinary course of business, no action required. If not, the next question is it within the cutoff limit or beyond the cutoff limit? It is within the cutoff limit, within the transaction limit specified, then you have to take a board approval, and that is a compliance required. If it is beyond the cutoff, then it should go through the audit committee and then the AGM. Then it has to be approved by the general body. And there are certain restrictions for the voting and things like that. All those things you must have already seen yesterday. So that is the compliance. Section 1, accounting standard 18 also needs to be complied with. Point number 14, whether the company has an internal audit system commensurate with the size and nature of its business. So we saw it in the morning. In our opinion and based on our examination, the company does not have an internal audit system and is not required to have an internal audit system as per the provisions of Companies Act 2013. Or can we say, as it is not required to have an internal audit system? So we saw this in the morning, so I'm not getting details into this. Whether the reports of the internal auditors for the period under audit were considered by the statutory auditor. And he's giving a hint that you should better consider. No, point, that is true, but he's also giving a hint that yes, I have to. Can I say no, I have not considered? It cannot be like that. Okay, that way. But I think you should, as a statutory auditor, insist on the internal auditor's report. You should put that as a foot down and say, how can you insist me? Maybe unless it is a case where the time deadlines are coming, listed companies or whatever, then you don't have a choice. But otherwise we should insist. Otherwise you should say that the company does not have a proper internal audit system. And internal audit system does not mean, that's a very important point. Whether the company has an internal audit system means not just an appointment of an internal auditor, not getting just an internal audit report, ensuring the compliance with the whatever areas pointed out by that is the system that we are talking of. So that is also talked about in the guidance note. 14. 15. Whether the company has entered into any non-cash transaction with the directors. That means I have given something, when I have given services and I'm getting shares, anything like that, where money is not involved. If you look into the cash flow statement, cash flow, the company has given something, but the directors or the persons connected with the directors are not giving cash beyond 188. That comes under 192. So if so, whether the provisions of 192 of the Act have been complied with, the requirement of the 192 is we'll have to get a valuation done for the goods or services which has given for whatever he's exchanging, and it has to be approved by the general body meeting. So that is the requirement under 192. 15. 16. Whether the company is required to be registered under 45(1)(a) of the Reserve Bank of India Act. We have seen this. Direct if he is a if he wants to be an NBFC, or if he is passing the test of principal business of 50/50 test. If so, whether registration has been obtained. The B, C, and D is not very important for every company. It is for HFC's core investment company. So I may not get into the details of that. Point number 17, whether the company has incurred cash losses in the financial year and in the immediately preceding financial year. If so, state the amount of cash losses. So we have already seen how to arrive at the cash loss. Cash law, we know how to arise, but the point to be noted to the guidance notice, give the whatever adjustments to be done on account of qualification also has to be loaded to this particular figure. Point number 18, whether there have been any resignation of the statutory auditors during the year. If so, whether the auditors have taken into consideration the issues, objections, or concerns raised by the outgoing auditors. So whenever there has been resignations and you come in place of a resigned auditor, please understand that if a person has actually completed his term, 5 years or 10 years as the case may be, and then you are coming in as an auditor, it is not a case of resignation. The change of auditor, every change is not a resignation. When I would put it like this, wherever ADT 3 is filed. Okay, so there you'll have to be very clear, and the rules for resignations have also been told. There has been an implementation guide from the institute as to how an auditor should resign. He should not just give a casual remark with respect to his resignation, saying that due to my personal reasons or because of my preoccupations, I am resigning from the audit. If you are saying that, then you cannot file any more ADT ones. If you are so preoccupied and giving up this company, how can you take up the next company? I mean, that is the logical conclusion. The point they're saying is, please be very specific as to what is the cause for which you are resigning. Most of the situation, it could be a time where the company has been purchased, acquired by some other, and they have their own group auditors. That itself is a reason. Or it could be where the fee is not, there has been a failure with respect to the fee agreement. So we can put that as a reason. Or it could be saying that there has been some misstatements or fraud or whatever reason. So put that on the fact so that the next auditor will be aware of that, and that such auditor should take cognizance of the previous auditor's observation. Now, this is 19. Point number 19, I was talking about a very loaded question. On the basis of financial ratios, aging, and expected dates of realization of financial assets and payment of financial liabilities, other information accompanying the financial statements, the auditor's knowledge of the board of directors and management plans, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit report, that company is capable of meeting its liability existing at the balance sheet date as and when they fall due within a period of 1 year from the balance sheet date. That means after you sign the balance sheet, until, let us say today you are signing the balance sheet of 31/3/22, today you are signing 18th of June, you must be praying God that the company should continue until 31/3/23. So you don't do puja for yourself. You should do for all the balance sheets that you have signed. That is what it means. So how are you going to answer? You don't know which company will fail when. All companies are good till they fail, isn't it? So how do you know which company will fail? So of course, what they have given is on the basis of the financial ratios. So you look into the financial ratio. If the current ratio is lower than 1, okay, there is some problem there. That ratios could, net profit ratio is falling, liquidity ratio is down. The operating ratios are very bad. So that could be a hint. aging and expected date of realization. If you put up the aging analysis, when you are going to get your debtors are outstanding for more than 3 years, your creditors are outstanding. So this could be either payment of financial liabilities. You have been declared an NPA or whatever. Other information accompanying the financial statements. There could be, other than the financial statement, there could be other information. Auditor's knowledge of the board of directors and management plans. In spite of all this, the management could give an undertaking saying that we will get it from the holding company or whatever, outside funds. Whether the auditor is the opinion that no material uncertainty exists as on the date of the audit report. Even in the main audit report, please let us note, the main audit report, there is a paragraph called material uncertainty with respect to going concern. What is that? That paragraph is not a via media. In case the auditor has got a doubt about the going concern, under that paragraph, he goes on to say, I have a doubt, but the management has convinced us, in spite of all these weakness, the management has has convincing evidence, and I am also convinced that the going concern issue can be resolved. That is what we are going to say under that particular paragraph. So link that and this and answer accordingly. Very beautifully. Our institute in the guidance note has given very good wordings. When I was very, very happy with these wordings, they have not given a positive affirmation. They have given a negative sort of a confirmation. Let me read it to you. According to the information and explanation given to us. Here, please note that although at the top I have told according to the information, etc., then below, here he specifically I felt that it should be there. According to the information and explanation given to us, and on the basis of the financial ratios, aging, and expected date of realization of financial assets and payment of financial liability, other information accompanying the financial statement, our knowledge of the board of directors and management plans, and based on our examination of the evidence supporting the assumptions, nothing has come to our attention which causes us to believe that any material uncertainty exists as on the date of the audit report, that the company is not capable of meeting its liability existing at the date of balance sheet as and when they fall due within a period of 1 year from the balance sheet date. We, however, state that this is not an assurance as to the future viability of the company. We further state that our reporting is based on the facts up to the date of the audit report, and we neither give any guarantee nor any assurance that all liabilities falling due within a period of 1 year from the balance sheet date, including the audit fee, will be discharged by the company as and when they fall due. Yes, is it not beautifully worded? Right? Very beautifully it has been worded. I think I will not change any one word from this. Yes, sir. Yes. The question itself is as on the date of the audit report. That is why I told you in the morning that you have to calculate financial ratios as on 31/3, as on 18th of June, if you are signing on 18th of June. Events check. क्या करें, सब लोग ऐसा बोला तो हम भी बोलेंगे. Yeah, the last bit of the question, whether in respect of other than ongoing projects, the company has transferred unspent amount to a fund specified in Schedule 7 to the Companies Act within a period of 6 months. We've already seen it in the morning. You have for CSR, this is applicable. Point number 20 is applicable only to those companies where CSR has to be spent. If you have to spend the CSR, you have an option of spending it in the subsequent year, beyond which you have to decide whether it is a closed project or an ongoing project. If it is an ongoing project, within 30th of April of the subsequent year, you will have to deposit it in a separate bank account and spend it in the next 3 years. Otherwise, within 1 month thereof, you have to deposit in the separate bank account. Or if you decide that I don't have any projects, then up to 30th September, you have to deposit in Schedule 7 funds. So that is what you'll have to say accordingly. Then last bit, whether any amount remaining unspent under subsection 5 of 135 the Companies Act pursuant to any ongoing project has been transferred to a special account in compliance with the provision of 135 subsection 6. Otherwise 135(7). Twice the amount that is required to be spent plus the amount to be spent. So that is the danger. And if on 31st of March 2000, at the year end, to the extent of unspent amount, there must be a provision created in the books of accounts. Otherwise, that needs a qualification. If you have spent something surplus during the year, can I adjust it against my future obligations? The answer is yes. In the next 3 years, you can adjust it. What if I have spent it before 21/1/2021? The answer is no, because shortage also you don't have to spend, surplus also you don't have to, you cannot reclaim. You will have to accordingly account it as, that has not been told, although I don't know whether you will call it as prepaid. I don't think, no, because you have spent it and you have spent it, that's it. I don't think you'll have to show it as an asset. Liability has to be shown, asset need not be shown, but for the purpose of future adjustments, you can show that I have already spent it in that year. I think so. Okay. I think that is the end of CARO report. Applicable only to the reporting on consolidated financial statements. We have already seen this. So what we need to give is only the paragraph numbers, serial number, name, SIN number, holding company, subsidiary, associate, joint venture, and class number of CARO for Prakash Chandji and company chartered accountants. Right, sir? Prakash Chandji, who is sitting here, I think he's the senior most member, the past chairman of the Bangalore branch. So which year, sir? 92, 93. That was the year I qualified. So I'm so happy that you are here. Your presence gives us a lot of booster. Thank you so much, sir. Thanks to all of you who have been patiently listening. A word of caution. I always say this. Do the right thing. Satyam vada dharmam chara. Don't do whatever, don't say whatever is not correct, just for the sake of pleasing your. One word I have to say, your client is not your boss. Your client is not your boss. And the auditor is not the final authority. Please take this very seriously. Your client is not your boss. He may be paying you the fee, but then he is not the boss. And finally, who is the boss? Who is the boss? The regulator. The regulator who, I am actually part of the regulation. In that sense, I am part of the regulator in that sense. So don't consider me to be a part of the client. That's why they say you should be independent of your client. You should not review your own work. You should not be an advocate. I'm talking of the threats. Self-review threat, the advocacy threat, the independent. You should be independent. And so your client is not your boss, and the auditor is not the final authority. You know what I mean. The auditor can also be audited. So keep that in mind. And if that is kept in mind, everything will be fine. Yes.
So I think we have only 2 questions in online. So
Yeah, sure.
can we take it? Question 1. In case of a private limited company, money received from the member, which is the director as well, is the auditor certificate required, or we can consider that money is received from director only?
Yeah, I think that question was already asked. If a person, see, if the money is received from one person who is also a director and a shareholder, then I will take the one which is convenient to me. I will take it as a director. Similarly, I will tell you one more situation. If the advance is received from a customer who happens to be a company, I will take it as a money received from a company and not put it as an advance received from a company. For the reason that if I show it as advance from a customer, within 365 days I have to deliver. If I received it from a company, I can keep it forever. So I will call it as any amount received from a company is also considered to be exempt. So the advance received from a company can be kept as received from a company, and the 365 days rule does not apply. Next, Pramod.
Maintenance of deposit for 5 years to real estate companies exempt or not?
Advance for immovable property. Advance for immovable property, there is no condition of 5 years. You can keep it for 50 years also. But the transaction should finally go through.
Yes, we have.
So if you do not go through and just say that for immovable property, I've collected this, then it will become a deemed deposit. That's what I said. So if advance towards immovable property, that 5-year rule applies only for services. Maintenance deposit, it is in the nature of security deposit. It is in the nature of Ravindra Kore avarige namaskara. Surya Bantu. Yeah.
We can take that.
Yes. Correct.
In cases where the provisions are not applicable, especially private company, whether the reporting stating that it is not applicable is needed, not refer.
Yeah,
slash
I already
report itself.
mentioned this in the morning,
Yeah.
that you have two options, either to keep quiet or to state. I would always say it is better to state, because it should not look as though you have forgotten to give. So we specifically say, if it is applicable, I'll say please refer to Annexure A. If it is not applicable, I will say that the company is exempt and therefore care of provisions have not been given.
Last question, Kritika Babu. Sir, you were mentioning title deeds not in the name of the company, but purchased out of company money. Secondly, sir, if not purchased out of company money, then whether it should be reported.
I will put it like this. What I meant was, it is recorded in the books of the company as company's property. If the money has gone and it is registered in the director's name and shown it as a loan to director, I don't have a problem. Then it is a loan to director. I will look into those provisions. But having money gone from the company, registered in the director's name and shown in my property, plant and equipment as my property, plant and equipment, that is where I will say the title deeds are not in the name of the company.
You want to answer?
I wouldn't say it is fraudulent. In a way, yes, fraudulent. There is a difference between fraud and fraudulent. Fraudulent means what can be said to be voidable. Now, the point is, for a reason they must have, maybe it is an agricultural land, it cannot be registered in the company's name. Then they should not have registered. It could tend towards that only, what you said. What cannot be done directly should not be done indirectly. Absolutely. Correct. There could be so many reasons why it happens, but then first of all, why should I as an auditor take that which is in the director's name as company's property? That itself is wrong. No, not required. Rights issue, there is no requirement for. See, the point is, in the case of a rights issue, the beneficiaries are the existing shareholders in the existing proportion. So I am not actually giving it out to outsiders. And if I'm giving it to outsiders, I'm giving it with the full conscience of the shareholder. So therefore, I am not adverse. The existing shareholders are not adversely affected. So logic. Under 56.2.10, under 56.2.10 also there is a case law. The Menon and Menon. In proportion, perfect, in proportion. In disproportionate means you are right. Disproportionate means you are right. Yes.
Thank you, sir. We have come to an end of excellent session. Thank you for taking out your time in this busy schedule and also sensitizing us on various aspects of the CARO, which is relevant in today's date. Thank you, sir. On behalf of Bangalore branch of SISC, I would request Chandra Prakash Jain ji to come over on the dais and hand over a token of appreciation to Gururaj, sir. Thank you once again, sir.